So you want to start investing.
But are you confident that you have the necessary expertise?
Did you know that most retail investors actually lose money when investing?
Yes, it's estimated that around 80% of retail traders actually lose money when they're investing.
Now, I wonder why would that be?
Maybe it's because they don't take the time to prepare, to increase their knowledge before actually starting to trade.
Always remember, when it comes to investing, you can never know too little. Always aim to learn more each day.
There are no guarantees, but you can shift the odds in your favor by following some simple rules.
And that is what we'll be covering in today's video.
So stay with us till the very end to learn what are some of the best rules to follow when it comes to investing. Do thorough research.
Regardless of where you want to invest your money, be it stocks, commodities, forex, crypto, the first step is to do thorough research.
Look at the macro trend, the high-level picture. Is the company performing well? Look at their balance sheet, income, and cash flow statements.
Evaluate if the business has growth potential in the future and if any global or national factors can affect the company's revenue or image.
If you want to be a long-term investor, it's critical that you know the market you are in order to make rational decisions.
If the overall trend is bullish, and yes, there may be some small corrections along the way, but in the long run, you should expect the asset price to grow.
Don't invest more than you can lose.
How many times have you heard this in the news?
People losing their cars or houses because they sold them in order to make an investment.
Only to lose all of their money by making a bad investment decision. You must avoid this.
Set up a budget. It's crucial. How much money can you afford to lose?
When you want to invest in something, always remember, you can lose all or most of the money.
And in order to avoid this, follow rule number 3, which is
use a stop loss. This is one of the best ways to minimize your losses.
Yes, some investments will not go your way, regardless of how much thought process was put into it.
And there can always be what we call black swan events, such as the crash back in March last year, where only a very few select number of people knew that there was going to be a massive stock market crash.
Retail investors, you and I, will always play with a disadvantage.
And yes, sometimes you can be so unlucky and buy an asset just before a big stock market crash.
When investing, set up the proper stop losses in case your investment goes against you, so you can limit the impact on your portfolio.
A recommended strategy is no open position should generate a loss of more than 5% of your overall portfolio.
As we said, you cannot be right all the time. It's impossible.
A good investor will tell you that you only need to be right 60% of the time in order to make money.
It may sound like a low percentage, but remember that most retail traders can't even achieve this.
Never beat emotion.
Money is one of those things that get people really emotional.
Just think about it. How did you feel when you win some money?
Regardless of the amount, that feeling of winning will always be a highlight.
When it comes to losing money, things get worse. People become even more emotional and start panicking at the thought or sight of them losing money.
It will happen. You will open a position and think it may be the best one yet,
only to see that in a short while, things have gone exactly the other way around.
Yes, it's counterintuitive to our human nature, but leave your emotions out of it.
Don't base your investments on emotion. Avoid the scenario where you lost some money and start investing aggressively just to try to make that money back quickly.
There are no guarantees. Just because you had some bad luck, it doesn't mean that your next investment will be the big win.
You've heard it before, but especially when it comes to investing, patience is a virtue.
Be calculated, patient, and disciplined. Wait for the opportune moment to invest and do not let your emotions get the better of you.
The last golden rule to follow is what we consider to be one of the most important ones out there.
The trend is your friend.
But remember, the trend is your friend only until it ends.
This is a very common saying among investors.
Stay on the side of the market's momentum. If the overall macro trend is bullish, stay bullish.
You are more likely to make money by going along with the market sentiment.
not by betting against it, like trying to buy into a bear market.
or trying to sell in a bull market. Both of these decisions are quite risky.
Remember that there will always be corrections, both to the upside and to the downside.
For retail investors, it's crucial to follow the market's overall sentiment.
However, you need to understand when things become too overheated by staying informed on a daily basis.
When your asset has reached your price target, it may be a very opportune moment to take some of your gains off the table.
Don't get greedy. It's almost impossible to sell the very top of the market. Cash in your wins and wait for the next opportunity.
That's it for today's course. We hope that the information we shared will help you become more profitable when trading.
Thanks for watching, and we'll see you in the next video where we talk about the candlestick graph. All the best!